panel. And well, very welcome our fellow panelists, Kyle from Multicoin, Paul from Pantera, and also Alex from Dragonfly. And panel one's title is, if you have 500 million that you had to deploy today to the cryptocurrency space, where would you allocate it? So the size of it is currently about 250 billion according to CoinMarketCap, and compared to traditional securities, which as a market cap of almost 70 trillion. When do you think crypto market cap will cross the 1 trillion? Hello?
Hello.
Hi.
Hey.
Hey guys.
Hi everyone.
Good morning. Good evening, wherever you are.
Wherever you are.
Yeah, we're in very different time zone. Thank you so much for some of you guys getting up so early and joining us for the panel.
Thanks for having us.
Thanks for having us.
Anytime at 6 a.m.
So why don't we start by our self-introduction first and introduce you guys to our audience today.
Great. I guess I'll go first. Good morning, good afternoon, everyone. My name is Kyle Samani. I'm a co-founder and managing partner at Multicoin Capital. We've been investing, Multicoin's been investing in the crypto space now since 2017. We run a hedge fund and a venture fund and have been really active investors across kind of the range of spaces. Multicoin's got a team of 13 people across the US and China. And we're very excited for the chance to be here today and talk about some of our thoughts on the crypto market.
Cool. I'm Alex Pack. Great to be here. I'm the founding partner and venture partner at Dragonfly Capital. We're a crypto asset venture fund with headquarters in the US and Asia. We're backed by many of the largest global tech companies, investment firms, and crypto companies such as HUOBI. And we invest all over the asset class.
Hi guys, I'm Paul Veradittakit. I'm a partner at Pantera Capital, and Pantera Capital has been investing in cryptocurrencies and blockchain exclusively since 2013. It's myself. I've been doing venture capital for about 9 years. Joey Krug, founder of Augur, and Dan Moorhead, who was the CFO and head of global macro trading and Tiger Management. Coincidentally, we actually do manage about $500 million. So kind of perfect for this this panel. And then outside of that, you know, we run a few different strategies. We have a Bitcoin fund that invests into Bitcoin, an ICO fund that invests into pre-sales, digital asset fund that invests into secondaries, and a venture fund, which I spend most of my time on investing into equity.
Nice. A very nice background. Very nice background, Paul. I like it. So our first question, and also our major question for today, if you have 500 million that you have to deploy today, where would you allocate it? Let's not limit it to just cryptocurrency, but everything else.
I think, I guess I'll start with that. I think some of the biggest opportunities in crypto are yet to come. There's going to be a lot as this technology matures and as the base infrastructure becomes scalable and robust, and it just all works magically. A lot of new industries are going to realize they can leverage underlying trust minimized technology to change their industries. And so I think there's going to be a lot of opportunities over the next 3 to 5 years to make big investments in companies that have a bold vision for how to reshape an industry. One example I would give is one of our portfolio companies called Helium, and their vision is to completely change the business model of how you build and manage a wireless network. Today, to build a wireless network, it costs billions of dollars to deploy the towers and the backhaul all over a city or state or country. Helium has a vision to cut that cost by 100x. But even cutting that cost 100x is still going to require a lot of capital to get that thing going. And so I think there's going to be these kinds of really big opportunities. There's going to be to in DeFi and exchanges and others that are going to create big opportunities to deploy large amounts of capital.
Yeah, I guess 500 million is quite a bit. It's kind of what Andreessen just raised for their current fund. And I'd say right now, I mean, if you're deploying capital, I think it's a great time to deploy capital. Of course, there's a lot of opportunity to scale on the liquid markets. The larger caps like Bitcoin, Ethereum, and anything in the top 30 is what we mostly trade. And so, you can definitely deploy quite a bit of capital there. But I also think that this ecosystem is really primed to get much larger, especially on the venture side. So whether it's deploying into seed and Series A in decentralized finance projects, everything from, could be decentralized derivative exchanges to other types of stable coins or other types of companies that are building on top of new chains. But also, I think in the next year or two, we're going to start seeing a lot of growth stage rounds. And growth stage rounds means, companies that have done very well, and it's mostly around financial infrastructure. So could be, it could be prime brokerage, order execution type companies that are making quite a bit of money right now, like Amber, or larger local exchanges in different geographies and emerging markets like Bitso. And then I'd say, lastly, we're going to start seeing some consumer applications that are going to really emerge, building on top of these chains. One of my favorite is Audius. I mean, decentralized SoundCloud, being able to really enable new types of content and be able to disintermediate the middleman and sort of bring economics more back to the users and more back to the artists. So those are some of the things that I think are really exciting.
Yeah, I've been investing in technology companies as well before crypto. And the fascinating thing about this industry, it's probably the most fast changing and tech driven of any category of asset class in the world by far, even historically. Despite that, the categories that we invest in at our fund actually mostly has stayed the same over the last few years. It's just the innovation within the categories has grown. So, the big three areas that I think you want to deploy capital into are, one, the large cap tokens. And in that, Bitcoin and Ethereum have seen tremendous concentration in the last few months. They and then Tether, the trading pair for them, represent about 90% of all the volumes being traded in the last few months. And if you look at the total fees paid on these blockchains, which is probably the best metric for the health of and sort of the value that's going on in these ecosystems, it's about 100 to 1,000 times larger than the chains below them. So they're positioned quite well. The second category is the applications that Kyle and Paul were talking about. DeFi, decentralized finance, is especially interesting to us. It's having a real breakout moment in disrupting the financial system. And then the third category is market infrastructure, brokerages, exchanges, which are not just sort of providing the financial layer for the crypto system, but potentially for the non-crypto system as well, with the rise of DeFi and synthetic assets. And traditionally, you've had to run a venture fund and be a high net worth investor to invest in a venture fund or something like that to invest in this category. But now actually individual investors can sort of participate with exchange tokens and things like that as well. So it's a quite interesting time to be in crypto.
Yeah. I think one of the things that the four of us all agreed on is really deploy capital on real case applications in the industry and supporting projects like DeFi. So as HUOBI Global has now received listing for new projects, and we as one of the big exchange are actually obligated to help with those projects to grow and support them to be more successful in the ecosystem. And we are looking for those same type of real application process in the space and just support them along the way. Interesting question. When do you guys think the crypto market cap will be crossing the 1 trillion threshold?
Sure, I'll start off with this one. Timing is difficult. Crypto today is what, 200 billion? I think 150 to 200 billion. So it's about a 5x or so from here. I'd say there's a small chance that happens later this year, probably 5 to 10% chance it happens later this year. I think there's a pretty reasonable shot it happens next year. My sense is that both Paul and Alex agree with me that I think we're in the early stages of a multi-year bull run right now. This virus is kind of the ultimate catalyst that's really good for crypto. So I'm optimistic it'll happen next year, but if it doesn't happen next year, I think 2022 is a pretty high probability. So one of the next 2 years or so.
Yeah, I mean, I think the same thing. I mean, I think we'll come out of this current pandemic really strong, and I think Bitcoin is going to be a huge driver of that. But later this year, I mean, I think there's going to be other chains that are launching, and a lot of progress and a lot of installation of really cool developer tools that'll really help folks continue to build more applications on blockchain. And I think a lot of that will drive more consumer adoption and drive more awareness. I think later this year will be great. I think next year will be even greater. And I can definitely see it getting towards that mark. I think other things that will drive, adoption and awareness and market cap will be regulation. I think regulation will be helpful and hopefully open up more and more clarity, more and more licenses, possibly launches of things like Libra, the Chinese digital currency, things like that are really interesting. And then, of course, as you mentioned, institutional capital. Now, I don't think we're there yet. We're having more and more conversations. Pantera just brought on a top 5 endowment into our funds, and I think for being sort of a newer fund without any connection to some of the larger institutions, I think that's a huge milestone. And I think more and more institutions are starting to dip their toes in, and Paul Tudor Jones was monumental. And so I think more and more people will start seeing this as a way to diversify their assets. In we always say a single digit percentage of your net worth is perfect for cryptocurrencies.
Yeah, I think there's 2 tremendous catalysts in the last few months. The first is COVID, which has of course caused a lot of instability, but the main thing it's caused has been just an absolute massive shift in wealth transfer from to the technology sector. Tech stocks are all booming, and entire real world sectors like airlines, energy, fashion, retailers are collapsing. As COVID has basically accelerated digitization, which crypto is part of, by maybe 5 or 10 years. And then the second factor is, of course, the sort of macro and QE response from central banks during a crisis. Bitcoin was born 4 periods of central bank overreach and global macro instability. And, the first recession, an instance of that, of QE in 2008, 2009, is what birthed Bitcoin. And then the second instance, which is going on now, is what's going to accelerate it. Hard to predict. I mean, I'm a venture investor. I like to hold things for 20 or 30 years. But I think, at least within a 5 to 10 year time frame, we're going to see these trends impact the crypto market prices.
Very, very different opinions regarding that, but at least we're all in the same direction. We do see that it will be reaching 1 trillion sooner or later. So I have prepared one tailored questions for each of you guys. This time we'll be starting with Paul. So Paul has been especially bullish on Bitcoin and citing a greater than 50% chance that it will go up big post the halving event that just happened. So is that a positive attitude for blockchain shared across the firm? And if so, what type of BTC related projects, products, or services are you most excited about going into 2021?
Yeah, we just had a Bitcoin halving call, and I think one of the best quotes that came out of it was from Jesse of Kraken. He's saying that Bitcoin's not even priced into Bitcoin. I mean, for us, like, we think that there's so much potential for cryptocurrencies. And during this time, it makes sense that Bitcoin, is going to rally. For us, I mean, with all the, as Alex mentioned, with all the stimulus that the government is putting in and the eventual inflation, people are going to look for different ways to hedge and speculate. And when people think about Bitcoin, they think of it as a great store of value. And so we, as a fund, we have a Bitcoin fund that is actually best priced compared to all the other Bitcoin vehicles that are sort of out there. And that has gotten quite a bit of inflow recently, especially from Asia too. So, I think people are seeing a flight to Bitcoin as a way in this pandemic to really be able to speculate and monetize well. I think in terms of applications, we're obviously following the Lightning Network very well, and we think that they are developing some things that are very interesting. Also, being able to wrap Bitcoin and make it usable in DeFi. Things like Keep, I think, are doing some great things for Bitcoin. And so we're going to continue to monitor. Blockstream has always done some interesting things for Bitcoin. So we're going to monitor all those different projects. But I think for us, Bitcoin, at least right now, as a store of value, is going to drive more and more attention and more market cap to the cryptocurrency market, and that'll drive more entrepreneurs, more capital, and that'll just mean the entire ecosystem is going to rise with it.
Sherry, you're muted.
Oh, sorry. So Alex, now that you've reduced some of your responsibilities at Dragonfly, are there any specific sectors of the blockchain ecosystem that you like to get more involved in?
Sure. Besides the macro shifts that are going on, I think one exciting thing now, just from a technology perspective, is we're starting to see traditional looking applications of crypto on the layer 2, which is not to say that layer 1s like Bitcoin and Ethereum aren't applications and useful. They're money protocols, they're for value transfer, but they also don't look like traditional apps. So they can be confusing to a lot of new users. So a lot of the activity going on in decentralized finance is quite fascinating to me. It's really the only category of decentralized applications that have real and breakout valuable usage. It recently, the whole DeFi category recently hit like sort of what I call the triple billion, which is there's 1 billion of capital locked in DeFi today. There's 1 billion of loans that have been originated this year. Loans are the backbones of any financial system. And there's been 1 million in monthly decentralized exchange volume, which has just been growing. X volume has grown maybe 5 or 10x in the last 6 months to significant levels. And it's about to get much larger. BTC and Tether are getting introduced to the DeFi ecosystem. There's going to be cash settles as opposed to physically settled products that allow you to do synthetic assets. Like you can bring sort of the S&P 500 or gold or oil into the crypto ecosystem as well.
Okay, so last question for Kyle. You often talk about the importance of founder market fit, but in an industry where many entrepreneurs are pioneering in a seemingly new space, how do you measure founder market fit in lieu of directly relevant experience?
Yeah, so founder market fit can take a lot of different forms, but we generally want to understand what is it about the entrepreneur's past that gives them a reason to have some insight about the market that would be very difficult for other people to develop. If you actually have a big idea, it starts to, as you ship the product and get users and do all that stuff, it usually becomes pretty obvious to other people as well, within a not too long period of time that you're onto something big, which inherently invites competition. And so we really like to understand, why does this entrepreneur have some unique insight about how the market works, how the limitations of technology, whatever, where they really are poised to understand that the best and to make sure they maintain an edge in kind of driving those markets forward. So, for example, there's a lot of innovation right now happening in the DeFi space. The more time we look at the stuff being built, the more we've realized that we really like founders who have had some background trading at a hedge fund or somewhere else, where they understand how to think about opportunity cost of capital, how to think about execution, how to think about things like basis risk. And if all of that's already internalized, then it makes it much easier for them that when they're pitching new investors or new traders, how to speak their language in a very native way and how to develop conviction about the product roadmap and kind of relative priority of features. And so we really like founders who just like, we know their background gives them unique insights to how to build the future.
Great. Okay. Thank you so much for you guys for such a great panel. And we're running a little bit short on time. And thank you so much for your time.